All right. How's it going, guys? Let's get another one of our session. I know it's been a while with all the different sessions going on, with the Take Profit Chamber beginning. It's just been a lot. So I know we haven't gotten a chance to do our back testing sessions. So what I'm gonna do today, I know we've uncovered the top-down analysis and things of that nature. We've gone through all of that. So what I'll do today is pretty much get through a trade that I took from this week, maybe about two of them. It won't be a long call. I'll try to make it like 30 minutes to an hour. I know some of our calls sometimes can go up to like 2 hours because we get real detailed, but I'll try to make this one shorter. So that way, even for the watch back time, it's easier for those who are trying to watch it. That way they can get through the content faster as well. So without further ado, let's begin. So I'm just gonna go from a direction of what I like to do when coming into the market. Um, as you know, you don't want to always show up to the market every single day doing a top-down analysis. It's a major time killer, um, especially if you're coming into the market 30 minutes before the session or 15 minutes. A top-down analysis will kill your momentum of trying to see what price is about to do. And generally, you don't really need to go from daily or monthly, daily, all the way down every single day. Really, you only need to do that maybe once, twice a week, maybe, if not even further along, once every 2, 3 months. I mean, 2, 3 weeks. But how I like to do it, I like to go straight to the 4 hour. As soon as I get in the chart the same day, I go straight to the 4 hour. Some days I'll go to the 1 hour, but 4 hours what I like to do most. And what I look for on the 4 hour, I look for the main push. What is the main push? The main push is basically the most recent break of structure, the swing highs and from the swing high or swing low. As we could see here, this was the main push. Let me use the moment. This was our main push here. This led to the high that broke this here structure. All right. So we can understand that this is our main push. Control Z. All right, so we know that this is our main push. Now, we also know that on a higher time frame, this is our um external trend. This is not it is internal trend, don't get me wrong, because if you go on a monthly or daily, it is a internal trend. So I'll quickly briefly just go to the daily to show you what I mean, or the weekly. You can see that it is an internal trend because the main trend is down. So this is the first swing high, second swing high, third swing high, fourth swing high, fifth swing high, sixth swing high. So you can see that from this high led to this low led to this high led to this low, broke structure. Retrace, this high led to this low, broke structure. Retrace, this high led to this low, so on and so forth. So you know the pro trend is this leg here. This is the pro trend. We're on a bearish market, and we've also broken structure here. So we know that we're still trying to continue down here. But for now, we need to complete this retracement to the last swing high, or this swing high, or overall this swing high, or this swing high. But we can't just predict which one price has to react from. So what we do is from each, because we're intraday traders, so from each one of these swing highs that we know price has to retrace to or is retracing to, we want to look for a trade from that swing high if it shows us our setup once it reach that POI. Alternatively, while the internal structure is happening, we want to also look for trades inside of these internal structure heading towards this swing high because we know that's where we're heading. Okay. So that's one thing you want to analyze when you're going from that daily to weekly, etc. down. So jumping back to the 4 hour, so I know that the pro trend now is bullish because we're heading towards that swing high we just talked about. So I know that pro trend is bullish. Anything that's happening away from this main push that we've just identified, anything that's happening the opposite direction of it, excuse me, anything that's happening the opposite direction of this trend, we consider internal structure or also known as retracement because we know price moves in that format. It'll break structure. What happens after a break structure? We must have a retracement. Then price will go break another structure. Then we must have a retracement. But what we didn't get here, we didn't get a break of this structure from this. Price from this low, price pushed up and failed to break this high. So at this point, we know that, okay, if price didn't break this high, this retracement to this zone, for example, is not to mitigate here and then push up higher. Why? Because price never broke the structure to confirm that. We didn't have a BOS from this area to say, okay, we're going to break the structure, come up here, and then come back down to mitigate this zone and continue. That's why this area failed, for example, because that area failed to push price high enough to take the structure to the left. So always remember that when a structure when a structural low like this or any internal time frame fails to break the point of origin that it came from when retracing back up, if it fails to break it, when price returns back towards it, you have to expect that it's going to fail. There's only a few times that it won't fail because price is coming to remitigate. That's because you'll see that price broke an internal structure right before that high to come down, remitigate, and push again. But those are case-by-case scenarios. All right, so let's get to yeah, someone has a question? All right, so I'll continue. So let's get to the cake of this whole narrative. So knowing that price failed to break this high right here, we know that we're coming down to this overall zone or this one here. Mostly I'll say this one here. Price did give us a reaction here and made this push up because of news, but this could simply be a complex pullback. We can't automatically assume that, okay, wow, because this reaction happened, price is not going to all of a sudden go up here. We can't make that prediction. Granted, this low did not lead to this high. It was this low that led to this high. And what did price do? Price came and fell this low already. Not to mention, we have this whole line of liquidity lined up here of many different taps. So we can't automatically assume that this is now a bullish market that's heading towards these highs. Okay. So we have to still watch and be careful and watch price action because this is the overall low that led to this high. Because yes, price made the original point here, but this one led to this high. It was this low that caused this break that retraced right here and led to this overall tap. I mean, this overall mitigation of breaking these highs and these highs. So we know that this area right here has precedent. All right. I'll get down to a little bit more details about the zone later when we get to a lower time frame. But for now, this is just how I'm analyzing the market once I'm coming through. I'm understanding that, okay, we're in an internal retracement. Price is bearish. I'm on a 4 hour. Okay, so I'm looking for sales. So I'm assuming before we even get to this news candle, when I go down lower time frame, I'll push the bar replay back so that we can go without before the date. So then I jump down to the 1 hour. What I'm looking for in the 1 hour is what is my nearest POI. That's what I'm interested in. The nearest point of origin that price is headed towards. Okay, so I know that I was in this trend line. Let me use the bar replay quickly for this area here. Boom. Okay. So from this point of view, I'm looking at price. Okay, we're here. Where is the next order block? Actually, let me keep this real quick because you'll see it better. Okay. We're taking this trend line. I'm looking, where is the next order block that price could potentially give me a reaction from? Now, let me zoom in so you guys can see the chart better. So from seeing that the market is around this area, before all of this happened, let's assume I move this back right here. Okay, so I'm looking, where's the nearest order block? Price already induced this zone. This zone failed. Price just blast through it. Okay, this was a low. This was a swing low that led to a swing high. Price has taken that. At this point, I'm convinced I'm in a bearish market. Until price reach this level of demand and give me a reaction to come break the next swing high that is going to create, I'm in a bearish market. Okay, so now I'm looking, where's the next point of origin? Where was the last low that led to a high that broke a significant structure is what I'm looking for now on the 1 hour. That's this here. This low led to this high, breaking this structure, breaking this overall swing high structure. Okay, yes, it began from here that led to this high, but we have to also look at what's it called, the decisional and extreme. This is our extreme. This is our decisional. This is where price consolidated, did a lot of took a couple days here, consolidated, and finally gave us a push up here. That's at least what, 1, 2, 3, I want to say like 4, almost a week worth of data is just within this area for price to then push up. So of course, this area will have some sort of significance, i.e. why when we got this reaction here from news, it pushed up so high. So we can understand why that happened. And I'll, like I said, I'll later on get into more details as to how I investigate an area to kind of understand if this area is going to have significance, or if it's not. So on a 1 hour, as I mentioned, I'm paying attention to this detail. I'm looking at what area price is reaching. And if price is there already, as I'm coming into the session, that I'm going in a lower time frame to see if price is going to show me some sort of setup that I'm looking for. I like to take my trades at a point of origin, at a POI. Although one of the trades I'm going to show you this week wasn't necessarily at a POI, but I'll show you how I also cash trades that's in, I would say, in the middle of no man's land, as they call it, but price still shows you signs of, hey, I'm going to make a turn from here or not. Okay, so from the 15-minute, we understand that, okay, this was the POI we're headed towards. We've just violated this zone. So now let's go to, what I like to do is go to my 15-minute from here. Excuse me. I thought my phone was on silent. It keeps going on. Okay. All right, boom. So now I'm on my 15 minutes, in my 15-minute. 15-minute, what I'm looking for now is internal structure. I'm looking for internal structure from main push. So I see this was the last high that led to this. So I know this was my main push right here. We haven't retraced. So if anything, I know from this high to this low right here is the main push. We haven't retraced any of these areas. So I understand now with this whole news candle that pushed up and did all this, it's not because we've now entered a bullish market all of a sudden. Yes, internally we may have because price needs to retrace back to a premium level from here. But until price show me full confirmation, then I won't believe that this is all of a sudden a bullish market yet. Because when I take my fib tool and I'll go from, let's say, this high to about this low, I see that price needs to return somewhere in these areas. Somewhere in these areas in order to fulfill a premium retracement, to come to a premium zone. So we can expect anything to happen from this zone. When we go to lower time frame, we can find an order block. As we can see, there was a high here that led to a low that broke a structure within this area. So price could easily come here and give us our push down to come take out this decisional to finally come mitigate the extreme. So as you can see, that 0.27 ends here once price reaches a premium zone. So let me take this out. So these are thought process that I'm having. So I'm not gonna automatically expect, okay, well now price, I'm gonna wait for price to get all the way here for me to finally take that trade. You could, I mean, it might take a couple days because you are on the 15-minute, but you're intraday trader. You're trying to trade towards the point of origin, or you're trying to trade towards the premium zone. So from the 15-minute, I like to, if I'm at a POI, such as this, for example, I like to go to the 5-minute to then find structural levels that price is doing internally. So here's where we're going to get a little bit into trades and understandings. Okay. All right. So here we go. Some trades from last week. All right. So this was on Friday. Okay. Before I go Friday, let me go from, let's do a week worth of trades. I'm gonna start from perhaps Wednesday. This one is gonna be included. All right, perfect. So let me go ahead and minimize this, and I'm gonna bar replay. Let's bar replay to, and I'm gonna start from Asia right here on Tuesday, the opening of Wednesday's session, and we'll carry on till Friday. So you can see the trades, and I'll break down the trades so that you guys can understand why. All right, so from here, I'm gonna quickly go to 15 minutes so we can kind of see the structure once again. All right, so from the 15-minute, we can understand that we came from this high. We've been breaking structures. This was the main push, and price reached a level here where it slowed down. Buyers have shown a little sign of control. We've just induced, we've done a medium inducement at this zone here. This was a low that led to a high that broke these structures. This was an extreme. This was a decisional. Price reached that zone. It gave us a medium inducement. give it more clarity. Price gave us this medium inducement. As you can see, that zone, did it fail? I believe it did. Oh, no, actually, it didn't fail. Price didn't take out that zone. It gave a reaction. So as you can see, the bottom of the candle was right here. So price didn't fail this zone yet. It gave us a reaction. Now, we know that this high led to this low, although it mitigated, but it broke this structure. So understanding the idea of breakup structure, we know that if price breaks a structure, it needs to retrace, mitigate, and continue down and take the neck, create a new leg. So all of this is simply a retracement to where? Okay, we could say this zone. Now, I'm going to just briefly break down a little bit of how I investigate a zone because we can easily say all over the market, there's bearish engulfing. There's no bearish engulfing here. Someone could say, oh, this is a order block. Why? Because this high led to this low and it broke this structure. They're going to mark this as an order block. I remember when I first started trading, I had over 30 order blocks all over my chart. It was order blocks everywhere. I didn't know which one to expect price to react from. That's simply because I didn't know how to properly um, dissect a zone, dissect an order block, understand its significance. You want to see that in this order block, there is a series of liquidity cycle. If you're in the YU course, of course, you understand we've been taught about liquidity cycles, the buildups, the unintentional movement, the liquidity sweeps, all of these different things. You want to see that happen in that area to give you some sort of significance that price will give you a reaction from that zone. And you also want to see that it led to a breakup structure. You don't want to see all this buildup inducement happen within the zone, but it failed to lead to anything. So when price comes back to it, it's most likely going to violate it. So let's carry on with my trade for this day, which was Wednesday. Um, we're starting off obviously Tuesday night, going into Wednesday, New York, London session. So as I said, I came into the session, I realized this high led to this low, broke structure. This was the previous day high. So for me, this is anything from this high within this order block would be considered my inducement of the day or the main inducement, right? Or any low that was a previous day low, if price induces it, that will also be the inducement of the day. And as we know, we trade away from the inducement of the day. So I go down to the 15-minute. I understand the 5 minutes, I'm sorry. I understand the 15-minute structure. Still bearish. We didn't fail to make a low. Price didn't come and only induce this low with a wick like here and it continued to make this retracement for me to say, oh yeah, this zone will fail. It actually came and broke structure to the bottom. So we know that it's only retracing, not to all of a sudden turn around because it's mitigated this zone. No, it mitigated the zone to give itself the reaction, the momentum it needs to get back to the point of origin that led to the breakup structure so that it can mitigate it and come push lower again, right? So I watched through. So this is how I narrated the trade. Um, let's see. Okay, let's see. Okay, so from the 5 minute, I would notice at this time it's not my trading window. This is my kills don't already finished, it's not my trading window. So I'm just gonna carry on from the previous session, what I noticed, because that's the whole point of a narrative. It's like reading a story or watching a television series. If you're missing episodes, you're not able to quite follow the story of what the show is about. So you have to read previous day sessions, previous day data, and understand where you're coming from. We've already covered that on a 15-minute, we're coming from a high time frame. We've bearish, but internally. But we know on a daily, we need to keep going up. But for now, we've just entered a bearish market because we've just recently broke a swing low that led to a swing high, and it failed to break the swing high structure. Now we're dumping down to the point of origin where this all started from. So we know that these cells are happening for a reason. These are the main push now. So we've reached this point of demand, but we know that this demand was not the point of origin that led to that swing high that actually failed. So we know that this is going to fail also. But we understand that this is just a retracement for now. But we're going to look at the signs to keep confirming that. So When price this high led to this low, we can say this was the swing high, I mean the last high that led to this low that broke this structure. This also was this was the previous, this was the last high that led to this low that broke this here structure and caused the mitigation. Mind you, we're on the M1. Price retraced, came down rather than breaking this low because this high led to the low that broke this structure. Rather than price breaking this low to create a new leg to the bottom to let us know this is continuing, price failed to break the low, but instead mitigated the zone. Well, you say, well, why? How is this a mitigation? Because price fell to lower, there's no order block, et cetera, et cetera. There's a few things here that you have to see as to why it's a mitigation. Once you understand the concept of the unintentional movements, liquidity cycle, or the build-up inducement, then you understand in areas where price cause a build-up and an inducement, it leaves an order block. In different time frames, you will see the completion of this order block. For example, you could say this is an impulse candle as well, this zone right here. And when we marking a zone, we take it from the low of the zone to the high of the zone. So this will be where your mitigation happened. This was your, as people call it, the FU candle that price rejected. It rejected the zone and pushed up. That was an unintentional movement. Came down and induced it. This was the liquidity sweep that happened here. From this liquidity sweep, price pushed out, didn't break the structure, retrace, mitigate, expand. That's the completion of that cycle. Build up and build up right here, induce, give you a reaction, retrace, mitigate, expand. Once that's completed, what did it give? It gave you a change of character. It gave you your breakup structure. So in that moment, you could say, okay, well, here comes a valid zone at that point to enter and take a buy from. But I wouldn't take this buy immediately. Why? Because as you can see, price is building up in levels of liquidity again. One tap, two tap. You got, what was this here? I think another minor inducement, which was simply to induce this level of buildup. Once price induced it, pushed out again. So all you're seeing right now is that buyers have taken control. Buyer inducement, buyer inducement, buyer inducement. And what keeps happening after each inducement pushes out. Okay, right here, sellers took a bit of control. They induced right here, induced this area, but they failed to break the low. All they did was use this inducement. They tried to step into control, but buyer stopped them right here, pushed it back up. They tried to induce again, bring it down. Buyer stepped them right here, used the inducement of this build up, took those orders and pushed price all the way back up, creating this other level of breakup structure. So I'm just following the narrative coming into the Wednesday session, right? So this is just me reading the narrative. You have to be able to tell yourself the story of what you see happening. All right. I already know that buyers are in control. I've had one, two. Now this is a third level. How is this a third level? What did we get here? The same thing. Remember what I told you? A build up, inducement, price pushes out, retrace, mitigate, expand. But this time it didn't have to retrace, mitigate to this area because this area now is simply your extreme. Why is this area the decisional? Because from here, price consolidated. After it created the zone, it consolidated, pushed up, then broke this structure. So now you have decisional, extreme, and it gave you an impulse candle. So you mark this out. Same thing it did again. Build up, gave you a minor inducement into the zone and pushed out. So now we broken this structure. All over the chart, all we keep seeing is buyer inducements, letting you know price is bullish. We haven't seen no seller inducements that's pushed price down to break a significant structure. All we've been seeing is buildups, as you see right here, another buildup, inducement, push out. Price came back, retraced, mitigated this zone, push out again. So all I'm seeing is buyer control, buyer control. So as it's happening, I'm marking out the zones. I'm marking out the order blocks that has significance based on what price did. Now, price did not come back to this zone as of yet. It's a large zone. If I refine it, I could say, okay, right here could be the point of entrance. But for the sake of this was the high that led to this low to cause this inducement, I like to take the entire zone. And I don't enter trades at the top of the market anyways. So I'm okay with marking out my zones as large as 8, 9, 10, even 12 pips. Because when price just comes in, I don't take trade where it just comes in, boom, and tap me and I'm in this trade already. No, I don't do that. I wait for price to mitigate, do its not accumulation, do all the things it has to do here, and then once it finally give me my change of character break of structure, that's when I get in. So I don't just take trades at the tap. So I don't have no issues with marking the zones as big as I need to be. So I understand that price can react from anywhere. Okay, so let's continue. Now, this was coming from a Tuesday night. This is after our kill zone session, as you can see here. Price is coming here. Mind you, I didn't take any trades this whole time. I didn't take any trades. You may say, well, why didn't you take this trade right here, Sauce? Well, this trade right here, as I told you, this build up inducement, this huge zone, I'm not gonna put my my entry from here so you can see the level, the size of it. I'm not gonna take this 7.4 pip. I could have, but I wasn't gonna take it, especially because it wasn't a clean setup of mine that I like. Price already shot all the way up here. It fell to break after this long drop that's happened. I'd rather watch price action. After a long drop like this, before I just jump into a trade, I'd rather watch price show me its hands. And that's what it did here. I'm okay with sacrificing 1 or 2 days of not trading simply so I can build a narrative. And then when price actually comes to a zone that I know it has to give me a reaction, or an area that I know is going to give me a reaction, I can take that trade with more confidence. All right, so boom, we have Tuesday ending and then the start of Wednesday. This is the day where I'm like, okay, I've read the narrative. For the past 2 days, buyers have kept control, and I understand that we're pushing to this zone right here. Based on the 5 minute, I understand, or 15 minute, I understand that this was the zone, the 5 minute, I mean the 15-minute POI, as well as the 1 hour POI. Remember, I told you you always want to find the most relevant one. This was the 1 hour POI, this area here. It's more clear on the 15-minute. There you go, right here. This was the high that led to this low that broke this structure. So now I understand for the past 2 days, from Tuesday, from the end of Monday, Tuesday, this is where price is retracing to. So we can potentially get a push down here. Okay, so understanding that narrative, now let's go back to the 1 minute. Wednesday comes in, I wake up for London session because now I understand I'm getting close to my point of origin where I want to see price give me something. Either confirm that it's going to push up where I could take a buy into the zone, or confirm that we're going to sell down where I can position myself for that trade. First thing that happens, let's take a look at Asia. We had an inducement here that tapped into the point, the POI. Okay, that's what we want to see. What did it do? It led down to a change of character here. Okay, this is just a change of character, or it could easily be considered an inducement as well. So we don't know. I don't know yet. I can't just buy into it until I see a break of structure to confirm it, because a change of character isn't enough. So or I could just say, okay, this was simply a buildup, and this right here was just an inducement, and price is gonna take this zone here and push up here. It could easily been that. So for me, I'm not looking, even though we're not trading Asia, I'm just reading the narrative. Until price give me a break of structure, I can't say that that was what the significance of that action was. So I keep watching Asia session. Then price comes here, give me a consolidation. Okay, good stuff. Which is also a buildup of equal highs, as we can see, one tap to all these equal highs. Price is building up. Then price took the low of this consolidation. Didn't take the high yet, took the low of it. Okay, what does that mean? If it didn't create a breakup structure, so we still watching. Then price went up after it induced the low of it. It pushed up, induced this high, and at this point, we want to watch what it leads to. So price came down and gave us our now break of structure. So we can now mark this and say, okay, this was our change of character within Asia. Where were we? We could say this was our change of character, and this was our break of structure. We could say that now. Now we can confidently say, okay, we have a change of character, break of structure. We can now say that price came after it caused a change of character, return, mitigated this here. So we can see that all that's been happening is a mitigation of supply to supply to supply. We had one mitigation here. We had another mitigation here at this supply, and now price gave us this break of structure. What can we do? Expect price to also mitigate this zone, so on and so forth. But this is outside of my trading window. But this is just me building the hypothesis of, okay, this could be what I want to see happen to keep confirming to me that this overall zone right here that I was expecting a reaction from is building up to give me that reaction. So what do? I continue to watch price action. Price is doing this thing, boom, boom, boom. It's building a trend line, continuations of breakup structures we're seeing happen, continue and continue and this continues, price continues. Okay, let's see, make this a little faster. Now, Frankfurt opens, just paying attention to what Frankfurt's doing. Frankfurt does a third tap of that trend line. Okay, so I'm watching Frank. What did Frankfurt do? Frankfurt came up and induced a piece of this trend line. It didn't take the whole thing, but it induced it. This was a high that led to a low. It broke this structure also. This was a high here that led to this low, broke this structure. Didn't take Asia low, but from this break of structure, price pushed back up to induce. Now could potentially come down here to take Asia low and perhaps take out this zone. And if price takes out this zone, mitigate here and comes back, then that could invalidate what I'm looking for. Unless price give me a full bullish movement, I mean bearish candles inside of the zone, that will let me know, okay, maybe these zones will fail. But this is still premature. This is still early. Price hasn't even reached our time frame yet. So I'm just still watching, paying attention. All right, so price continues, boom. It mitigate this zone. Now, the first thought that came to my mind is invalidation model. I'm sure all of you guys will think of the same thing because we understand if price mitigate demand before supply, we expect the supply to fail. Vice versa, if it mitigates demand before the supply, then we expect the supply to fail. So in this case scenario, price mitigated this demand. And the first thing that came to my mind is, okay, maybe this change of character breakup structure was simply to lead price to come mitigate this zone to now push up even further into this POI because this POI wasn't even mitigated like 10%. This was a small mitigation. So I'm like, okay, maybe during my London session, what might happen is price will come up, make this a smart money trap, induce this zone to give me my inducement of the day, and then push down. These are thought processes that I'm having. But obviously, you can have your own thought process, but what price shows you is what you want to react off of. You don't want to marry your analysis, but it's okay to have an analysis because it's going to guide you. It's like your roadmap. And then as I'm watching, I'm paying attention, then it dawned on me, what is Frankfurt known for? You guys, anyone knows? Anyone remember? What is Frankfurt known for? Someone said maybe. Before I go there. Okay, so we know that Frankfurt is known for unintentional movement. Like Nayla say, it's unintentional movement. So all we're gonna get from Frankfurt, if this mitigation happened, when I thought about it, it's at 2 o'clock in the morning. It's not in our key time window. Institutions are not the ones causing this reaction. So the first thing that came to my mind is this could simply be an unintentional movement. Price could just be mitigating this zone to retrace back to the POI that it needs in order to push through lower. The same thing that's happening from here. The same thing that's happening from this zone. Price simply mitigated this zone simply to retrace back to this zone so that we can get the push down. So in that moment, I reopened my analysis to say, okay, let me see if this area now gets respected. So I went from thinking that this area may be a smart money trap, price might give me an inducement of the day here, to thinking if this right here is an unintentional movement, what I should see is this area being respected, this supply. So I'm watching. If this supply fails, I know that this was to come induce higher. And if this supply gets respected, I know that I could take a sell because this is one, this mitigated, this mitigated, this mitigated. And now if this gets mitigated, there's no way price is gonna continue back up to take all three of these supplies. So now I have a better understanding of what I'm waiting for. So I'm watching price action. I'm seeing all the buildup of liquidity, trend line building up here, retail support and resistance building up here. As you know how to mark retail from the wick to the body and drag it across. I'm seeing all of this happening here. Boom. Price finally reaches my supply during London session. London opens and we mitigate this zone at what? At 310. I said, okay, let me see what happens here. If this is valid, Price needs to now come and break my M1 ship, the low that led to the high that mitigated. I want to see price break that zone. That's what will confirm to me that this was a valid mitigation and I can expect a sell. That's why I told you that I don't take trades at the top of a zone. I'll wait for price to give me confirmation by breaking the structure that led to that tap to confirm that, okay, we've came to this bank, we picked up or we came to this station, we fueled up, and we've had enough gas to come down here, break the structure from the zone we came from. We've gotten back on the highway where we was coming from. This is what I'm looking for. So price comes, I'm paying attention. I'm watching. I'm seeing what's happening here. Okay, I've had an inducement. I see price did all this build up here, induced it, and pushing down, and it broke that structure. That's a first sign that that's the third sign, I'm sorry, that buyers are in control. First buyer inducement, what's in the mitigated. Second buyer inducement, third buyer inducement after mitigating this zone. Okay, so now it gives me a point of origin. On top of that, this is a consolidation zone. The inducement is what broke the high of the zone. Then we took the low of the zone. That means there's an area of point of origin, a POI right here. So I'm still waiting for that break of structure because price could easily come induce this zone, just cause an inducement right here, and then push right up. So I can't say, oh, just because we've had this inducement, we can't get an inducement here that comes and take out this zone. So I'm still watching. I need to see a full body close from this zone. So price comes, okay, finally give me a full body close. I'm like, good stuff. I'm seeing that. Now, it's building this retail support and resistance. We have all this build up. I know I have a trend line here. So I'm seeing all the reason why price needs to come take this zone. So I continue, push, push, push. We see more liquidity being built. We have this trend line here. We have this inducement right here of the seller inducements again. And my apologies, because I think earlier I was saying buyer. I meant to say seller from these zones. Might be speaking too fast. Okay, so price carrying through. I'm watching price action. This is the level of patience you want to have, if not maybe more. You want to have a level of patience where you're not in a rush to take a trade or feeling some sort of a FOMO that you've missed out on a trade. When you've understood the narrative, you understand, okay, this is what should be happening or you're expecting to happen. All you have to do is tell yourself, well, if this is supposed to happen, there are a series of events that needs to occur to confirm that. The same way, in order for a sell to happen, if price is bullish, you need to see a change of character, break of structure in order to confirm that, oh, this is a good area to sell. So it's the same thing. I'm literally saying, okay, if this is the POI for price to react from, because it's already mitigated here during Asia, mitigated here also during Asia, and now it's came back here during London, a key time window, and it mitigated it. For this to be valid to me, that these mitigations are validated, I want to see a change of character and a break of structure. So that's why we're just being patient watching it. I don't care if price would have reached all the way down here and do this and finally come back to me. I'm okay with waiting. I won't feel FOMO that from this point, like, oh man, this was my entry way up here. I should have got in from here. No, you wasn't supposed to. You could have. You could have risked it and price could have easily came induced this low right here. This could have been an inducement of this zone. Price could have said, okay, build up, induce here. It could have induced here. And from this inducement, gave you a push up from this area right here and carry through and break this structure and continue up. And you would have been like, oh man, I should have waited because Asia high is not yet taken. Price took Asia low. I should have known that Asia high is going to be next because that's going to be the first thought that comes to mind because that's what you've been taught. If the Asia high, we've been taught, if the Asia high gets taken, or Asia low gets taken, Asia high might get taken next or vice versa. And it's not wrong because it's true. But in this case, it wasn't that you were wrong. You just didn't have patience because you thought because price mitigated here and gave you this long rejection, you automatically assume that this has to be bearish now. But really, all it did was come in and induce here. Or if price would have came in this area before all of these candles got built, if this line right here was just an inducement from this area and then price push up here and took you out, you would have done the same thing. Oh, I should have waited because Asia high is not yet taken. That's not any of that. All you got to do is wait for your confirmation, which is what? Price mitigated. I'm just gonna wait to see now if it could give me a change of character, break of structure. Okay, did all this. I'm patiently waiting. Look at this. It's already 4 o'clock. I have yet to enter the trade. My kill zone is right here at 5:30. So I've got about an hour and some change. If price don't give me nothing within the next hour, I'm going back to sleep because it's 3 in the morning for me at that time. Okay, so I'm carrying through. I'm watching price action. So now I know that I've gotten change of character. I've gotten break of structure from this zone. This was my break of structure. So I've gotten both the confirmations that I need. Change of character, break of structure. Price did not mitigate any order block. It didn't come back to any OB to invalidate this zone because once it created this zone, it didn't come down, mitigated demand to come back and push through it to invalidate it. So I know that this zone here is valid for me to sell. And look at the POI, 6.5 lot size. Okay, so I took this sell and I aimed for the what did I aim for? I think it was for this demand here because this was the extreme. Because price had already validated this decisional, I aimed for the extreme zone. Could have aimed for lower because this is a whole trend line. So what I did is I aimed for the trend line. I always like to aim for the next point of origin. I didn't want to say this zone will be respected simply because I have a long trend line here that price built from this POI. So I would at least want to see price react from this zone by taking enough of the trend line to come back, mitigate somewhere here and then push lower, or take the entire trend line. Either way, I was okay with just getting my 1 to 5. 1 to 3, I didn't even take partial. I just did full TP at 1 to 5. So this is what happened. Because I got my change of character, got my breakup structure, price mitigated my zone, all things that I like to see to confirm A plus setup coming out of a POI. So what happened? Price came and mitigated the zone all while building up liquidity to let me know these are the liquidities we're going to sweep on our way down. Another thing, this right here, smart money trap. A lot of people got taken out of this zone. Why? Because they saw, okay, price came down, mitigated this demand, pushed up, broke structure. This was the high that led to this low that broke this structure. This low led to this high and broke that structure. And this was the low that did the final push to take this high. Price then came up, push in here. Asia high is not taken, but Asia low is taken. This zone is going to be where price is going to retrace to mitigate and push up to continue. That's what most smart money traders in this case would assume that this trade is going to be to lead to further mitigation of this zone because we barely tapped in here. But what they failed to understand is the inducements and showing us who's in control. We've already known that we were retracing to this zone just to mitigate to push further. But they got lost in the internal movements. You guys got to still keep your overall analysis of what's happening. All right, so price mitigated us in. From price mitigating us in, I like to pay attention to the continuation of the trade. Let me see if price still is in control, if buyers or sellers are still in control, in this case, sellers. So we had the seller inducement here that gave me my change of character breakup structure. Price retrace gave me a buildup of liquidity. Right here also came down for the third tap, came up, induced that liquidity inside of my POI. More good stuff to see. Push down, broke that structure. Same thing as I told you guys. The liquidity cycles, you want to see a buildup, inducement, push down, retrace, mitigate, expand. Same thing that happened here. Same thing that happened here. Price build up, induce, push down, retrace, mitigate, expand. Build up, induce, push down. The reason it didn't retrace and mitigate here is because this was just a consolidation zone. Price never took the high. One of the somebody asked me the other day about this trade. Say, oh, why didn't you take it from right here? Sometimes we are so excited for a trade that we miss the nuances of the details. We know that if there's a consolidation zone, if the low or the high or one side of it is not yet taken, that price has to take the other side. So there's no need to say, oh, this is going to be my decisional and this will be my extreme. I can automatically disqualify this as a decisional because the other side of the area is not taken. And if price is to come here, respect it and go down, I'm okay with missing that. Pain of discipline over pain of regret. And what did price do? Price did come and mitigate it and gave you a fake reaction. It sold. It made you think, oh, you're right. Oh, you're right. Look at all these taps. You're right. You're right. You're right. You're right. Even down to here. It made you think, oh, maybe I put my stop loss a little too low because it was too close to this. Look where it did it, and now it's finally pushing down. Look at the strong bearish candle. And you would have probably somebody put up, you would have jumped in again, put another sell, another sell, another sell, early sellers. And what did price do? Come all the way here. Finally hit it like, this was the mitigation. I was supposed to take it from here. And they do take it from here. And price do all of this. They thinking they're safe. And price come right back, give one last inducement, take them out to finally give the move. Sometimes you want to wait for those confirmation. All right. So to finish that off, build up, induce, push down. I'm either gonna see a retracement mitigation from here and push down, or probably just gonna continue. But regardless, I'm in the trade. I just want to see where's the next build up inducement is gonna happen, or if I'm gonna have a retracement mitigation for this zone. So what ended up happening is price continued. It built up here, induce, push down. Why did it come and take this one out? Because it had a trend line right above it, liquidity. So instead it came, sweep the liquidity. So I'm still under the impression that sellers are still in control. Another push down. Look at these areas. Another build up. I'm gonna zoom in a little bit more, make sure you guys can see it clear. Another build up inducement, and did the same thing once again. Push down right back into the extreme that was created. But as we know that there's a consolidation, a trend line underneath it. So I'm not expecting price to still hold in this zone. It gave a reaction for those who was waiting for the extreme zone, thinking that, the demand didn't push price high enough. It's gonna be the extreme that's gonna do it. And they got into the trade at the tap. People who gets in the trade at the tap, nothing wrong with it, because there are times you want to get in on some aggressive entries. But me, I've strayed away from aggressive entries as such, especially when it's a POI like this. I like to see price give me the reaction. So even if you would have waited for a reaction here, price didn't give you a change of character break of structure. It swept, it induced this zone, as you can see with a wick, but it didn't close a body or break the structure up here to give you a BOS to know that you could come down and buy from here. Instead, it did what? Build up, induce right here, and push down. So I kept it through all the way until price finally hit my TP. And I was out of that trade. But as you know, price dumped from this area. It didn't even just stop at my TP zone. It actually dumped. Or was it? Yeah, I think it did. Let me at this one I could take this one off and carry through. Yeah, so this was the area price. Yeah, this one. Yeah, this was the area when price came. Or there you go. This was the trade. So as you see, price dumped all the way to the point of origin that we talked about. Let me make sure this is the right one. This is Thursday. No, so it's not this one. It was this one right here. There you go. Price dumped from the trade we were in. This is the Wednesday trade. This is still Thursday. Intention. Oh yeah, it was this trade here. Wait. Where's my trade? I think I just lost myself for a bit. Yes, it's right here. There we go. Okay, so yeah, it was this trade. As you see, price came, hit the trend line, which was, am I on a high time frame? I don't see the trend line that I marked. Consolidation, supply. It's not the unintentional movement I was talking about. Excuse me, guys. I'm just trying to make sure I'm on the right. Oh, okay, there we go. I think it was this one here. Yep, it was this one here. There we go. As you see, after price hit my TP, which I took it just to the trend line to be safe, because at the end of the day, if price was going to do all this retracement, I didn't want to be a part of it. Granted, it did after it took a portion of the trend line. It reached this extreme. It gave a reaction and then pushed down. It's not that I couldn't hold a reaction. I just don't like once I've reached a 1 to 3, 1 to 5, 1 to 6 type of trading zone, I don't like to sit there and watch price do all of this retracement and possible break of structure to retrace to come high, mitigate deeper, and then come down. I don't like to watch my profits go from one zone to another, like go from being up a couple grand to now back down 200, only 100. For my psychology, I'd rather get out the trade, wait for the next day, find another trade. All right, so let's carry on. The next trade, which was on, this was Wednesday, this was London session. All right, so New York gave us a possible entry. I didn't take this trade. This was just marked for a breakdown that I was doing of a possible entry that I would have taken. But because it's not big enough for my TP, I didn't take it because I felt like when price reached this zone here, this supply, that it would most likely give a reaction because this was the high that led to this low, did the same thing again, but it didn't break structure, but instead induced. Because it left me equal lows, I was wary of that. And this zone is big enough where price could come down, induce the equal lows, and still respect the zone and then continue up. I just passed up this trade. Granted, price did, and it did this consolidation here where the clear change of character break of structure was what's the word I'm looking for? It was a bit it was shaky. I like when I have clear directions. So let's quickly go to it. It won't even take no more than 3 minutes. This high led to this low and broke this here structure. We can agree on that. As well as we know that there was a build-up inducement here that led down to this low that broke this structure. Cool, good stuff. So we can mark out that this was our supply because this was the last point that caused this after this long drop that we've had. Okay, this was the most recent one, we can say. So now we had a retracement. It wasn't a full retracement to the zone, but it was about 40, 50, close to 50%. Then we say this high led to this low, broke this structure. But this didn't quite have a build-up inducement, etc., to say that it'll go on retrace, mitigate, and expand. It didn't quite have it, not at least to my liking. I wouldn't classify this as just a simple inducement to cause all this. Just a push down, retrace, mitigate. If it is, then that explains why price failed it. Because if this was an inducement, push down, price retraced and mitigated already and continued. So when price revisit, it's already been mitigated more than 50%, like 80, 90%, then it's going to fail. So that could complete why this cycle right here wasn't even interesting. But for me, to consider that this was going to be a buy option from this zone, I wanted to see price give me a break of structure from here. This was my break of structure zone. Until this zone was broken, I was not expecting to do any type of buying. So this would have been my change of character because from this low led to this internal high. I wanted to see this internal high fail to break the low, not even create an equal, but even if it did create an equal low, in this case, to confirm that there's going to be a potential buy around the corner, I still wanted to see this zone get taken out. Now, some people elected that this could be a change of character, which makes this one the break of structure, which allowed them to potentially take this trade from this impulse candle. For me, that's not even that's not an A plus setup. That's not a B plus setup. That's like a C setup for me because it's not enough confirmation. This is more of like I'm trying to get a lot of trades up. I'm trying to get my quantities versus quality. So anytime I see a possible trend, I'm just gonna take it because I'm trying to get a lot of reps up. I'm not in it. I'm not trying to do this. Is not a moment of trying to get reps up for me. I'm trying to keep a consistency with A plus setups, B plus potentially, but mostly A plus and B plus setup to build my buffer. When I have enough buffer built and my balance, then I could, go from having a high um, win rate to then maybe looking to lower my win rate to where it's not so much of maybe bring it from like a 50, 60 to probably like a 30% because at that point I'm taking more trades. But anyways, this zone right here, price did mitigate the impulse candle. It did give them that push out. Not sure if it gave them 1 and 3 or not. Potentially could have. But when the breaker structure finally happened, I'm like, okay, maybe I'm interested. But by the time it happened, my kill zone, I stopped trading at 11. From 9 to 11, I cut off my trading window. It's supposed to be at 9. But I cut off my trading window. So from that time on, I wasn't really interested and I just closed the computer and walked away. Okay. Doesn't matter. I walked away. So I let whatever happened here happen. So I didn't take this trade or anything like that. So coming into the session, which was the next day, which is here, and we're getting close towards the last few trades, and then we'll do a quick Q&A, guys. All right, boom. So we've had this big drop, boom, boom, boom. Price came, did the same thing here, a big build up. I'm gonna go to the 5 minutes so it can be more clear and less congested. Oh, I'm gonna erase my whole chart anyways today so I could start the week off with a clean chart. Okay, so we are right about here. Okay. So this was the last part. This is where I said I didn't take the trade. So what price ended up doing? Did a build up here. It induced this area. It induced this entire zone and dumped from here. Okay, so we know that this is a point of origin. This is a supply. Not to say we're going to look to trade here, but if price comes and gives us some sort of reaction from here to sell, like the same way it did the other time, mitigate it, probably give us a change of credit breaker structure. We understood this would have been another main push to continue taking the trend line that we saw from the 4 hour. I don't know if you guys remember, I showed you guys there was a big 4 hour trend line that price was taken, etc., etc. So we're here now. Coming into what day is this? This is Wednesday. Okay, Wednesday, boom, 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 boom. This was my Thursday trade. All right, same thing. Thursday, we were looking at London. All right, so I'm gonna go. We already see this highlight to this low. Didn't mitigate, but we had an inducement, a major inducement, because on the, I believe this was a 4 hour low. Let me quickly visit the 4 hour so we can make sure you guys see why I marked it as a major inducement. Yes, you see this? This was a low on a 4 hour. So let's start from here. High, low, high, breakup structure. High, low, high. Didn't break anything. High, low, but it was higher. This low was higher than this low. So that's a higher low. Low, high, broke this structure. This high led to this low, this lower high led to this overall high that broke this structure and this swing structure. Okay, so I understand now when price induced this zone, I can expect some sort of a reaction. So that's why I marked it as a major inducement, not a minor or a medium inducement. All right, so boom, right here is where our major inducement happened. As you can see, I mark it right here, major inducement. So what did price do? Build up, came down, induced, pushed out, broke this zone right here. This is not in our trading window, but that's fine. We're just watching it. We had a build up right here also. Price came induced. We had a trend line. This inducement pushed price up to do induce. We can agree that in this area, we don't know who's in control. The sellers, the buyers, the buyers, the sellers. Just a series of build-up inducement just happening up and down. We're not looking to trade, but we just want to see where is going to be the clean confirmation. Finally, we get one here. Push down, broke structure. Okay, we thinking sellers are in control. Then price did the same thing. Mitigate, came up, gave us an inducement, pushed out again this way. Now we've broken, first we've changed character here. This was the change of character. Then we came back, mitigate with this point, because this was the major inducement where it happened. This was the order block that was not mitigated when all of this was happening in Asia. Price finally came down in Asia, mitigated it, gave a minor inducement, pushed out here. So we have change of character, break of structure. Price created a supply zone up here coming into London. Now let's dive into that area so we can see why I took that sell from this area and not expect that price has to come in here first for me to see the sell. And this is the one that I told you. It's very rare that I take trades where price is in the middle of nowhere. Why it says the middle of nowhere? Because this was a point of origin and this was a point of origin. But price is not here and it's not here. It's just in the middle of the process. So here's what I saw. We've already marked, as I've told you guys, we have the understanding, we can all agree that we had our first change of character here. We had our change of character here, and then we had our breakup structure here. So we can agree that we have now began our internal structure. Let me move this up so it's a little bit more clear. We can now agree we have the structure of the internal structure being built, where price is respecting this major inducement zone. It hasn't been broken. Okay, so from here, I'm coming into London session, 3 o'clock. Let's put our arrow here. I don't know why it's not there. Probably went somewhere. All right, so we're going to put our execution window. So we know this is the start of London session. Okay, what do we also know about Frankfurt? This is a time that likes to create unintentional movements. And as we also know, unintentional movements can be in the direction of the trend. Internally, bullish is the trend right now. But the pro trend of this whole 15 minutes and lower is bearish. But internally, we're on a bullish retracement. All right, so price comes here. Give us out of Asia, we have this build up of trend line. Boom, 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 boom. Just reading the narrative. We had this recent inducement of this was the inducement that we saw in the 5 minutes of the buyers. Buyers induced, pushed up, which created this order block here. Price hasn't mitigated it. Price came down, it didn't mitigate it. It created trend line, trend line, trend line, trend line. We can see that. Okay, then we broke this internal structure. Push up here, retrace, unintentional movement, broke this internal structure. So what are most traders who trades either structure thinking? We've had break of structure, break of structure, break of structure, break of structure, break of structure. They're expecting price to react here, especially because it's an impulse candle. London opens. We've broken that structure, break of structure. We also had change of character and break of structure. They're like, man, this is a bullish. And on top of that, we're trying to get to this zone. So there's no way price all of a sudden going to turn around from here. So you say, so they're looking at this zone as their entry. But all this is a smart money trap. It's a smart money trap. Why? Because we already know that Frankfurt is known for unintentional movement. So why are you trying to look for order block that Frankfurt created outside of our trading window? It's more likely going to be a sweep. So what happened? Price came down. So this high led to this low. This low led to this high. Give you your first break of structure. Give you a break of structure. This high led to this low. This low led to this high. Give you another break of structure. This high led to this low. Gave you your first change of character. Let me use this. This was your first change of character. But if you're paying attention and you're sticking to your analysis, you're marrying your analysis, you're missing what price is telling you right in front of you. This was your first change of character. No, this is not a break of structure because this was just a wick. And this low did not lead to this high that broke this structure. It failed to break it. So you can't say being that it failed to break this high, all of a sudden this drop is a low that now pushed to this high to break the structure. That's not what it is. Because then you will say, okay, this was the break of structure. And in this case, it wouldn't have forced you not to take this trade, but you would have gotten in this trade and it could have potentially been an inducement and pushed out, taking you out. So I just like to be extra careful. But I know that this right here will be my break of structure. I wanted to see this one gets taken. So what happened? Price did the exact thing. Gave me a change of character, retrace, mitigate after this inducement, push down, gave me a break of structure, did a few consolidation, push down, and did another inducement of these lows. Okay. Did it tap into any order block? No, because this low led to this high, didn't break this overall high that led to this low that broke this structure. So I'm not saying that this right here is a break of structure because that didn't happen, as we could see here. Sometimes you just have to put the markings so you can see for yourself and make sure that you're reading it right. You're reading the narrative right. Didn't break it. But this low that led to this high that broke these structures and took the Asia high got broken down here. See, price broke that low coming from this high. And this low led to this high, but it didn't break this high. So we can't say that, oh yeah, this is an order block right here that price came and mitigated. How? How is it a significant order block? For one, it has a trend line right underneath it right here. And for two, it had no buildup of inducements of anything to say, oh, this inducing like this anything. It didn't do anything. It was just a low that led to an internal high that didn't do anything. Price retraced, took out these trend lines that's internally here, right? Let me move these out the way so it can be more clear. All price did was retrace, take out these internal trend line right here. Just took out these trend lines. That's all this inducement was. Price simply just came down, induced this trend line, and then pushed up. That's all happened. This zone did not do anything. All it had, look, it has trend line. This was a trend line liquidity. You could even stretch it all the way to here. Excuse me. You could stretch the trend line all the way to here. That's all it was. Trend line liquidity. So even if it was you count it as an order block, it's an order block inside of a trend line. So you know it's gonna fail. So when price came here and used this inducement and induced this zone right here, as you hear me like to say, induce the induce, it induced the zone to then push back to tap you into your POI. And this was my POI because price gave me a change of character, break of structure, retrace, mitigate. This was a how big was this zone? I think I took it on the 5 minute was smaller. Yeah, on the 5 minute was smaller right here. So that would be the trade. Let me grab this here. Yeah, that would be the trade right here. Left you a 5 minute OB. So 4.9 pip stop loss gave me a 1 to 6. And I took it to the equal low, the relatively equal lows that you see here. How is it relatively equals? You can see right here. This low to this zone, price didn't break it. If anything, price just hovered right above it. That's why I mark it as a relatively equal low, because price could simply come, because it's also a trend line. Price could have instantly simply came, induced it, mitigate this here POI, and then push back up into my zone. So that's why I like to be careful. I take my trades to the next POI as long as I'm getting a good risk to reward out of it. I'm okay with leaving a few more pips on the table. So what happened? That trade came, price mitigated it, pushed through, mitigated this demand here. That wasn't created inside of Asia low. This was actually a smart money trap as well because it was created in Asia low. It didn't really cause anything. It just led to some internal high. That price gave us a quick turnaround from to come down here. All right, cool. So that was that trade. Then going into New York, same setup happened. This high led to this low, broke this structure, mitigated this demand, gave me a medium inducement because this was a previous day low. This was from Wednesday. Now we're on Thursday. Gave me a medium inducement, gave me a second tap on the trend line, and price came out, took out the smart money trap. Built another trend line here, induced this trend line. Then I reached this zone here. This was the high that led to the low that broke this structure that caused this mitigation that also took out the smart money trap. I said the same thing. If I'm going to sell from here, I need to see price give me the same exact setup that it gave me the other time from the POI, which is not a build up, but an inducement followed by a series of change of character, break of structure. And that's what we got here for this trade. That's what we got here.
Bro, can you hear me?
Yeah, talk to me.
Uh, but we taking a little break off because like it's Maghrib time in here, so I don't
It's
know.
prayer.
Yeah.
Okay. Let's take because it's only last two trades, guys. Let's take a quick 10-minute break so we can get the prayers in. And then once you guys come back, we can finish these last two and have a Q&A and call it a call.
Appreciate it, bro.
All right, brothers. Sisters. So go ahead. We'll take a quick 10-minute break, all right? I'll be right back. Okay. All right, guys. Let's wait to see if everyone else is back. It's like, let's see, is S here? He asked a question. Okay. It's okay. Is everyone back yet? Okay, so for now, let's continue. Give it about another minute. I see it's almost the 10 minute. I'm gonna give it another minute and then we'll start, guys. Someone asked the question. I don't know if he's still in a call. He asked, he said the main push is bullish to go to the high time frame supply to complete the external structure pullback to then go bearish. Internally, price has approached the discounted demand zone you have marked, plus given a high time frame breakup structure indicating price could potentially have completed the pullback. He says we have also completed the liquidity cycle in that demand zone. So why he said so wouldn't you be focusing on your current pro trend buys? What is it exactly that leads you to thinking you should be selling right now? Just trying to pick your brain. Okay. And I'll cover that. And I'm assuming he's referring to the trade that we covered before. Before I go to that, let's finish this right here and I'll answer that question in a Q&A.
Oh,
All right, so where were we? Tuesday, I think we've covered this trade here. I believe this is, yeah, we're right here, I think. Let me see. Make sure it's the last two trades, yeah. Yeah, okay. So this was, yeah, we talked this one. This was the one that came in the middle. This was the follow-up. All right, so same as I said before, just to carry on, guys. So as I said before, knowing that this was the trade that we took, this was the 1 to 6 that price took. I took it to the relatively equal lows. Price came, wicked us out, got us out of the trade, and pushed up here. Gave us this consolidation, mitigated the supply. It didn't break it. It didn't induce it. It mitigated the supply. So it respected that zone and pushed down and give us another BOS. So what I could see is this original trade that I took from the beginning, that was in the middle of nowhere, as I called it, it did not reach this zone. And instead, price retraced and has respected this PO, this demand supply. This supply was tapped one time here. This then supply was retested, pushed down, create another breakup structure. This breakup structure retraced, remitigated this supply, but this time just a little bit, not the whole or even higher, just retested the supply, pushed down again, more breaks of structures. So it could lead me to say, okay, well, we've only induced this high to mitigate back into this supply, which mitigated from this supply. So it's just been a mitigation of supplies after supplies after supply, similar to what we saw when we first did the beginning of the trading series that I started showing you guys. It came from mitigation of supplies after supply. So it leads me to say, okay, well, I can mark this here as a supply zone and push this out and see where price leads us. So at this point right here, we're coming into New York. New York session starts, price comes down. Let's move this up. Price comes down on the opening of New York, gave us this build up, this demand got mitigated, price came up, gave us a build up. It didn't induce it yet, it just came back down, broke this structure. began creating this whole level of consolidation. The highs were not broken yet. The lows got induced. And this is where the medium inducement happened, which was from a previous day low. So the reason I didn't see this as my confirmation inducement, I always like to look to the far left. Look at this one little wick hanging here by himself. This is weird to me. Anytime I see a POI like this large, but you have this one little wick that's just in here by itself with all of this space,
Right.
I'm expecting price to induce it. Same thing like these. Whenever I see it's a big POI and price only has this small bit, 20%, 15% or 30% in, I'm expecting this to be induced if price is to go the other way. It has to, I want to see it take out these early buyers, for example, in this case, which it did. It induced them right here, called this inducement, and gave us a final level of inducement. All right, cool. That's good stuff. It's not nothing for me to trade, but it's just giving my analysis confirmation as to what I'm the story that I'm telling myself, right? Because that's what it is. You're building a narrative and telling yourself the story that these candles are telling you, and you're confirming it with the higher time frame so that way you can position yourself. So after this inducement, what I want to see to confirm that this was an inducement is a push out. I want to see price push out to come back, mitigate, and expand. So induce, push out, retracement, mitigation, expand, which it did. It induced it here. Price came, pushed out, retraced, mitigated, did another inducement of these build up and trend lines, and then pushed out again. So now I could say, all right, this is my change of character right here. The low was taken, the high was taken. I can say this is my order block that I'm waiting for price to come back into to mitigate and potentially push me up. But from this change of character, what happened? Price came down, gave us a break of structure. I'm waiting for price here and here because now you've given me a change of character that stopped up here. It mitigated a supply. So I'm like, okay, maybe this zone is gonna get violated. So I took my hand off the trigger. I'm not waiting to buy from here no more. I want to see if this zone gets taken to cause a break of structure because we are coming from this original demand. So this should fail in my mind because demand got tapped first before supply. This should fail. But price is giving me a reaction. So I can't assume I'm sitting there on my hand. Granted, I'm inside of my time zone, my execution window, but I'm not rushing anything because I do see a trend line here. So I'm seeing all the reason why this zone should fail. Why is price giving me a reaction? Sitting on my hands, I'm just gonna wait to see. So price came down, retraced, pushed up, finally broke it. Now I've got my confirmation that I could sell from here or here. Extreme decisional. So now I'm waiting for price to come to me. But price keeps pushing. What is going on? Price keeps pushing. Took out another supply. Okay, maybe it's because of this trend line. Maybe it's gonna get here, not tap here, and come back to me to tap here to finally push up again. Why? Because we're coming from a middle of nowhere. So I'm thinking we still need to get up here. All right, cool. So I'm just reading the narrative still. So once price came up and reached this supply, which, as I mentioned, mitigated this supply and mitigated this supply and the original supply that came from nowhere. I'm like, if we respect this zone the same way, every time price reaches a zone, I wait and read the narrative. When it tap here, if that would have led to a change of character, let's say price would have tapped here, came down, changed character, broke this structure, I would have waited for a retracement to get a sell in here and sell down. That's why I say you have to be reactive to the market. You may have your analysis, but once it reaches a POI or a zone, look for your setup. Look for that entry model that you have that you know defines that this is a trading model. So once it reached here, it mitigated this zone. This was a high that led to this low. This low led to this high. This high led to this low. This low led to this high. This high led to this low. This low led to this high that did a minor inducement into the zone once again and came down and gave me a change of character, break of structure. That right there was my entry position. The minute I saw this change of character, break of structure. Okay. Oh, wait, let me move this over. So this right here, change of character, break of structure, that was my entry model. So what did I do? Actually, I think I took it sooner. Let me see. High, low, high, low, high. Right. Oh yes, I took it from right here. This was my sorry, I think this got moved. This was my entry here. Let me make sure it's because I moved this way out here. I didn't take it all the way down to that low. What's this? 105. Oh yes, there we go. It's because I'm on this time frame. Let me go 3 minute. There you go. So yeah, so from the 3 minute, usually whenever I'm on a time frame where I cannot see a complete order block, I'll go to a higher time frame. All right. So from the 3 minute, this was my the position. I took it from the impulse candle, covered these highs, and I did a market execution, I believe. And once price came in, price didn't, it fell to tap here. It didn't come all the way to the POI. I did a market execution and I took the sell down. That was for that trade. But as you can see, I waited for my complete confirmation to take that sell down to the zone that I was originally waiting for a buy from. I was waiting to take a buy up to the zone, but once price came in, and this will be the last trade right here. Let me finish this one. When price came into that zone, I instead took a sell simply because price came in, give me a build up inducement, push down, change of character, break of structure. Oh yes, I'm sorry guys. This was the entry. It was based off of the inducements. Yes. As we see here, from this mitigation, price came down, gave me a build up, induce, fell to break this high, push down. This was my change of character. This was the inducement of the break of structure. I positioned myself for the trade. It was from, so I did have it correct. It was from this low of the inducement candle, and I covered the highs, which was above the point where price mitigated. So this was the trade from the 4 pip stop loss. I remember someone asked me about these equal highs right here, even though I stretched them out. But these are equal highs and relatively equal lows right above the zone. And they asked me, so why did you take this trade? Didn't you see these equal highs above and these relatively equal highs, as well as this POI that price could come in and do deeper? Yes, I did see them, but I understood if price wanted to take these out, this inducement that happened here would not have led to a change of character and a break of structure. This final inducement, this first inducement would not have changed character. All it would have done is induce, potentially come induce, or even induce this area, just cause an inducement and then come up. But price came in and closed a complete body, a complete body. The only thing that was left is either induce this zone, potentially come up here and take out maybe this wick right here. But I was okay with price potentially coming out, even taking me here. I think I might have had my stop loss higher though. I think it was within the equal highs. So I was okay with price coming in, taking this position, maybe tapping one of them. But I didn't see price that it was going to continue up. And if it did, I was okay with taking that loss because this was a not an A plus, but it was part of my trade analysis, like the type of trades I like to take. I like to see when price come, mitigate a POI, gave me a change of character / break of structure, and then come back and mitigate. Those are trades I'm willing to take. And if I take a loss on, I'm okay with that. As long as I saw my change of character, break of structures. So that was just for that trade on Thursday. But to me, the best trade of the week that happened was the one from Friday. Um, I was so confident in that trade simply because price made it very clear. Starting from Asia, quickly, high, low, high, break of structure, low, from a and build up, induced, pushed out again, boom. We know buyers are in control. We're also coming from this mitigated zone. Cool, price came up here, came down another build up, induced. This inducement failed to take this high, but instead led to a break of structure. Price then push up, retrace, mitigated this impulse candle, push down. All happening in Asia, but I'm just reading Asia narrative. Asia tells you the story. Asia lets you know what's about to happen. So from this case, okay, we've led down to this low. We've taken out this demand. We have ourselves a medium inducement. How is it a medium inducement? It took out a low from previous day. Remember that. Medium inducement takes out a low from the previous day. So this was Thursday's low of New York. Price came in down, induced it. Usually from a medium inducement, you can expect a reaction that's going to lead somewhere. Versus a minor inducement, you're just going to get minor reaction. This was a minor inducement. Same day. This happened here. Price induced it, pushed up. Just fulfill its purpose. Minor inducement, pushed out. It just does its quick job and it gets taken out. Does its job, then it gets taken out. Those are minor inducements. All right. So for this medium inducement, price came up, pushed out. As I told you, after it induced, you want to see a push out, retracement, mitigation, expansion to confirm that that inducement was valid. Because it could have easily did this inducement, come here and carry down further. That would have let you know that if another inducement happened above, outpowered this inducement and pushed it through. So you could even invalidate this was an inducement. This was just a reaction to come up here to do this proper inducement to then cause it. That's why sometimes you'll see where it's inducement high, inducement low, inducement high. You're like, who's in control? Those are the series when you start to understand that a little bit better. Boom. So price came back, mitigate, pushed out, gave you a break of structure. So we know, okay, we're back on this bull run again because buyers are once again taking control. The last time sellers tried to take control was right here from this build up right here. This is the last one. So I'll go ahead and mark out so you guys can see it visually. This was the build up. On into should move. This was the inducement. That inducement overpowered this one. So price simply used this buildup just to come up here, take out this buildup to then come take out all this level of trend line liquidity that it was given all during Asia. One tap, two tap, three tap. Had everyone believing, oh yeah, we're buys, take everyone out during Asia. Then after it's taken everyone out, it starts to build up itself again to continue. Consolidation is what we're seeing now. That's why I say this Friday session was beautiful. Price gave you a consolidation. It has just gave you a change of character here, came down, mitigate, pushed up, gave you that, the change of character happened here from this high, or you could say this high to this low led to this high, change character, broke structure, came back, retraced, mitigate, pushed out. But this is not our trading window. Even though it gave us the look of our setup and it followed through exactly as it should, it's not our trading window. So we just let everything kept playing through. We have this consolidation. The highs are not taken. Oh, what we could see here, we had a buildup of the lows of the consolidation, which price induced. So now the lows are taken. And as it took it, it gave you a trend line. So now you know that there's liquidity here was taken, and there's this liquidity that's being built. As liquidity is being taken, liquidity is being generated. So you know that this whole area is just full of liquidity. And underneath it, what do we have? We have this impulse candle, which is this one right here, impulse candle. But if you go to like a 3-minute, you can see it also a little bit more clear as well. That is also another impulse candle right here, this area. So you have this little low full body candle. So in these cases, when I have an impulse candle on a 3-minute, that's a little bit too small of a pip count for me to be realistic. I'm not going to take look at this, 1.3. Unrealistic. That's being greedy to say that, oh, price is going to come and give me a 1.3 stop loss and then take off from here. So I'll go to the 1-minute, where the 1-minute also has an impulse candle. So in that case, rather than me trying to pick between one of the two, I'll rather take both and give myself a better stop loss range that's more realistic. All right. So this is where you see me I didn't take it, but I marked it. This was the low of the 3-minute one, and this was the one of the 1-minute one. So I just took them both. So price gave us a more of like yeah, 1-3-5. I mean, it's a 3-5 stop loss. That's better. So I'm like, okay, I'm not expecting anything from here, but I'm just watching price action. Consolidation. I see the smart money trap get built. Why is it a smart money trap? It had a build up inducement. It pushed out. So that means it's a zone. It's an area where price can react. I could see that after this push out, price came back, reacted from this impulse candle area. So it was mitigated, but it didn't break the low. So I'm just reading the narrative. Then we finally took Asia high and we broke this structure to the left here. So carrying on, this high led to this low led to this high led to this low, building trend line liquidity, and this low led to this high, but as a form of inducement. Okay, maybe price is stopping. It gave another third tap for this big old trend line it was creating. So now I'm saying, if we're to continue up, price needs to at least come down and take out the trend line, mitigate one of these two zones. This medium and this minor inducement that happened at this POI, this POI that did the medium inducement that pushed out, price retraced, mitigated, and pushed out again, which did another minor inducement when it does the push out. So this became an order block. So to make it even more clear, like this. So this build up, induced, minor inducement, pushed out, broke this structure. Now I mark this as a zone. This will be my extreme. This will be my decisional, but I could see that this decisional is in a smart money trap because there's liquidity right underneath it. So I'm like, okay. But if price does this inducement and comes straight to it, perhaps it may not be a smart money trap because the low is taken and the high was taken. Price could easily come, mitigate, and save these for later. So the only thing that could confirm to me that this is not going to happen is if after this inducement, when price does this melt, if it breaks, change character, break structure, I don't want to see a retrace here. If it retrace back and mitigate a supply before coming to this demand is going to fall. That's basically our invalidation model in a nutshell. It's nothing crazy. It's nothing extraordinary. It's just the basic rules of what we know about the market. So what happened? I seen the inducement still before my time frame. Price came down, gave me a change of character, break of structure, and did a minor inducement and closed the body underneath this low, this inducement area, this minor inducement area, because it was a buildup of all of this. So from this low, it didn't tap into any order block of significance. And coming into my time window, it's about to be 3 o'clock and price is pushing up. Where are you going, price? If you're going to be buying up to continue, you're supposed to be continuing down. You don't need to come back up here. So if you're coming back up here, I'm either going to just wait till you do what you got to do and come to this zone and see if you're going to buy up. Oh, but then you have to remember what has been the pro trend. It's been sell, sell. What is it? What they say? Trend is your friend. I'm going to go with the trend. So seeing that price did this inducement, I'm looking at this wasn't a price came down, induced the change of character area to push up above, or price came down and induced the break of structure area with a wick and it could possibly come up. No, these are full body candle closures. This is confirmation. So at that point, I did what? I went to the 3 minutes, I believe, to find my zone, to find my order block. Found my OB on the 3 minutes right here, a clean order block. I even took a little bit of the imbalance and price came in, mitigated me, shot down. So go back to the 1 minute. Price came in, mitigated me into the trade and shot down. Immediately from there, I was even more confident in the trade because everything aligned with my understanding of why this zone here is going to fail. There's a trend line. Now I'm looking, this is a smart money trap. Immediately, that's the first thought that comes. Okay, this is a smart money trap because we've just tapped into supply first. We also have this trend line and this impulse candle here. I can't even really give it significance because yes, it's above a trend line. Price could either react from here, but you know what? Actually, I did not take it to the Asia low. I took it to, it was to the extreme. I took it to both of them. I took it to the extreme. I only put it to Asia recently to see what my RR would have been, but I took it to the extreme because I said if price use this just as a reason to push down, mitigate here, this could be the reason price pushed up because it did cause this break of structure of this internal high. This high that led to this low led to this high, broke this structure. So I was like, this could potentially push price up. So I'm not going to try to aim for Asia high just because Asia low, just because Asia high was taken. So I was okay with, let me take my TP right here. And plus these two together was about a 6 point something, 7 pip stop loss. So if I was going to buy from here, I was going to take them both. So I wasn't even going to take it at the tap. But I knew the decision, the impulse would have failed. But let's get back to the trade so that way we can finish out this session. So once price mitigated my zone, gave me a push down. Before this push down reached here, I saw a build up again of trendline liquidity. Price came up, another minor inducement. Let me open the chart so you guys can see it more clear. Right here, another minor inducement, which pushed down to a new low, break structure again. I'm seeing that sellers are still in control. Seller inducement, mitigation. Seller inducement. What am I expecting next? We didn't even tap the demand. We missed this demand. So we need to get more orders to push through it. So once price retrace, I put in a second position. Because at this point, I can see more reasons why price is trying to come take this zone out. It's retracing to mitigate a second demand for the second time. There's no way that this area is going to hold. So the minute price did that, I put another position in. I covered these highs. It was like a one, it was like a 4 or 5, yeah, 3.4 pip stop loss. Price came in, took this zone, created this buildup of trend line, dumped again. Watching still looking at all uh, 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 um, the seller controls. That's what you want to pay attention to. See where sellers are keeping control of the market. Another build up, inducement. Same thing. Push down again. All you're seeing is seller control. Induce, push down, build up, induce, push, same thing, another build up right here, another level of build up. But at this point, price already took me out. But had I held the position to still, let's say I did a 1 to 3 TP partial and I just was watching price continue, I would have seen this again, another build up, inducement, that sellers are in complete control of this market, just dumping and dumping and dumping and pushing price down all the way until they reach this zone. So that was that trade. I got a 1 to 5 from this second entry, and from the first one got a 1 to 5.7 from both of these two entries. So that was the trade from Friday. And here we are after New York. I didn't take any trades New York. Price came in, did this thing here, did this medium inducement, because this was the a minor inducement, I'm sorry. This was the last tap from London session at 5:30. It did this inducement. Then, as we know, the news came and just shot price up. Despite that, I did follow through. I see a relatively equal lows here. I see this build up. I'm watching price action, but I didn't see nothing that validates it for me. Yes, this was a POI that I've been waiting for the entire week for price to come to. It came, it induced it. It didn't give me a break of structure. It finally does right here. Gave me a break of structure. I mean, a change of character, break of structure. But this is outside of my window anyway, so I didn't take any sell. So I just let price do its thing, and that was the end of that session, guys. So anybody's questions that I can answer from the breakdowns, anything that you guys saw, have a question on, or want to get a better understanding of,
Yes, bro.
talk to me, brother.
Bro, do you know there's one thing that I'm not understanding? Do you know external versus internal? Because I was watching Yarimi thingy, he was saying the external is the big picture, right?
Yes, so the external, there's internals and external on every
Mm-hmm.
time frame, right?
Okay.
So
Mm-hmm.
your daily time frame will have an external, right? Your external on the daily time frame, for example, will be the long legs. So these will be, this is your external right here. This is
Wait,
your,
1 minute. Yeah, do you mind just showing them, please?
yeah, I'm doing so. So in this, for example, this is the daily. These will be external. Why? Because this high led to this low, broke this structure. This high led to this low, broke this and this structure. So all of this right here is your, from this point to this point is your external range, your dealing range, as they call it. Everything
Mm-hmm.
that's happening in here, between here, let me turn my thing on, you can see it better.
Yeah, I
Everything
can.
that's happening between here and here, you see I have those
Mm-hmm.
two bars, that
Yeah.
everything that's happening in between them is internal. You got me?
Mm-hmm. Could you just repeat that
All
one more time?
Yes, everything that's happening in from your dealing range, this high that led to this low, that broke this structure.
Mm-hmm.
Everything that's happening in between, as in during the retracement, is your internal structure.
Okay.
All right. So you can find internal structures and external structures on every time frame. From right here, this was a high that led to this low that broke this structure. All of
Mm-hmm.
this here all of this here were internal structure until this got broken. Then this became external and this became internal. As you go down on time frames, that continues. Each time frame have their external and internal structure. For example, same as this one. I'll show you quickly. Too big. For example, this low led to this high, broke this structure, right?
Mm-hmm.
These are
Yeah.
your external structures, but all of this inside or all of these are internal structures. These are all internal leading up to
Mm-hmm.
this. I'm sorry, not these, this right here, the retracement. These are all internal structures. From this low leading to this high, give you this breakup structure. These are your internal structure. This low led to this high. It didn't break this structure, this high. So this now became the internal structure. And now this became your main push, basically, your external, your main push.
Uh,
That's why you see on the main push, usually on the main push, you'll see price moves very fast. Like these big body candles get dropped fast. On the
mm-hmm.
internal structure, price moves a lot slower. Little break of structures take its time to get there. So
Appreciate it. Thank you.
yeah, just don't get it confused because every time frame does have their own external and internal. You just gotta keep that understanding of as you're going down time frame,
Mm-hmm.
remember the narrative is what I would say.
No problem. Thank
All
you,
right,
brother.
for sure, my brother. Let me see if there's anyone else have a question. Anything else? The only
Can we have a quick overlook of what we're looking for coming weeks, like in terms of obviously we just back tested. Thank you so much for this. Really appreciate it.
yeah.
We're just wondering like what's your thought process for coming week?
Yeah, so I mean, I wouldn't make a prediction, but I'll show you for
Hmm.
example what the first thing I'm going to do is I'm going to erase all of this. Why? Because at this point, all of this to me is done with. Price had this big old news. It has, to me, it has just resetted the market. So from here, the daily, I'll know that, okay, the last thing that happened was this area. I'll say this area here was induced. That's the first thing I would say. This area was induced. This was a major inducement. I'll say, where's my major? I'll say this was a major inducement, and I'll go down to my 4 hour and I'll say, where's my nearest POI? I'll see that I've reacted from here already. And I'll see that we've just taken out this zone here. I have an impulse candle here. So I'll probably mark this impulse candle for now because I know that price can potentially give me a reaction here. Even though I'm on a 4 hour, I'm just marking it to have periods where I think price could come into. And then I'll also know that I have an extreme right here. Okay, so these would be markers that I would say price could potentially come to. Let me just keep this here. Boom. So knowing that price could potentially come these, I'll do my fib. I'll say, okay, what have we done? All right. Okay, I see from this high to this low, the discount zone is somewhere here as I mark in the impulse candle. Okay, so I'll keep that in mind. That price could come up here and come back down and go to this low, or it could come up and continue up and then react from this zone to then come down. All of those are probabilities. So I'll go to the 1 hour. From this here now, what am I closest to? Am I closest to here or am I closest to here? Okay, I'm closer to this zone. So I can say, well, let's see. By the time Monday opens and everything starts, because the session's going to open today on Sunday, I want to see what happens from here, price going here. So what do I have here? I can see that I have a refined 1 hour POI here. Okay, so I'm going to mark this 1 hour POI. So I want to see what is this 1 hour POI and what significance does it have? All right, so I'll go down and I can also see that this one also, there's this area of decisional too. So I'll take the whole area. So I'll go down to, let's say 15 minutes. And I'll say, let me see, has there been any sort of liquidity cycle, any build-up inducement? Did this area do anything of significance for me to say that price can give me a reaction here? All right, I'll say that, okay, this was a high that led to this low that broke this structure. Cool. This was a high that led to this low that broke this structure. Cool. All right, there's also an impulse candle within this area as well. So there's enough structure building, but I haven't seen liquidity sweeps yet. So I'll go down to the 5 minute. But I do know that there's structure there though. Based on the 15 minute, I do see there was high that led to low that broke structure. So far so good. Now I just need to see to validate it with some sort of liquidity cycle that happened there. Okay, so what do I see here on the 5 minute? There wasn't really a build-up inducement here. This was just how that led to a low. Okay, I could see that here I had a small level of an inducement that took out these little buildups right here. So this was a where is it? This right here is a trend line. I could say, okay, I have a level of trend line right here. All right, so that's letting me know this zone could potentially fail. I know I have this buildup that looked like it was induced right here. So I'm like, okay, so price has liquidity all over this area. So I can't automatically assume that this area is going to give me a reaction, but I do see that price did from this mitigation, it did come back and mitigate this zone. Price came, pushed down, broke the structure, came back, tapped the supply, pushed down again, broke the structure. Okay, so I can also see that there's this big old level of impulse candle right here as well. I can actually mark this zone and price hasn't tapped it yet. So I could say price, if price is interested in higher zones, there is this imbalance here that price can come to and give me a reaction from. I could say, I can also say because of this trend line that price could decide to take this entire zone and not respect these levels or this order block because there's liquidity above it and instead come to this overall zone here and say, okay, price could potentially just react from here. So having this understanding lets me know why these are all the different areas within this impulse candle that I marked from the daily that I can see and wait to see price give me some sort of a reaction from and show me my lower time frame model, which will be like a change of character breakup structure, couple of inducements, medium inducements, minor inducements, and things like that. I would want to see all of those happen within this area. So these are all the range of places that it could happen. As you can see, is why I don't take trades at the top of a zone, is because these are all areas price can give reactions from. But the reaction is not confirmed until I see a change of character breakup structure. The reaction could just be just to go do another inducement of another area and push up again, or vice versa. So this will be my first pit stop. This would be like the first station I would want to see price come to and wait to see if there's a confirmation. And if there isn't no confirmation and all it does is keep giving me bullish intent, then I'm going to look for a buy to buy into the zone some more. Because let's say market opens up, and by the time London comes at 3 a.m., what I get is some sort of build up similar to what we saw Friday, where there was a trend line. There's an order block underneath it. Price comes, unintentional movement up, liquidity sweep, takes the trend line, mitigate the POI. I'm not gonna sell. I'm gonna wait for price to come up here, mitigate then to sell down. No, I'm gonna take the buy up, especially if it's in my time window, buy it up into the zone. I'll take it to the next level of liquidity, which will be the tap or this one. And then I'll wait for New York to give me something. Or if price opens up in London and it's already here, I'm not gonna say, oh, I'm automatically gonna sell. I'm gonna have the understanding that we could have a sell unless price shows me a setup coming out of that zone that doesn't change character break structure and throws off my entire structure cycle. It gives me more reasons to enter the trade to buy up. I'll do the same. But I'm not in a rush to catch a trade. If it doesn't look clean and it looks complex, I'm okay with just waiting for price to show me a better setups maybe within Tuesday, maybe by Wednesday. I'm not in a rush to have to force the trade simply because it's Monday and I have to trade. You know what I mean? So most of the time, I don't necessarily go through a market cycle and make a whole decision. Okay, this was has to happen and boom, boom, and I'm waiting for this. I just have pip stops where I'm expecting price to come to. From there, I'll wait to see if I get my entry models. That's pretty much what I do. Like right here, I could say, oh yeah, there's another build up. There's a build up inducement right here. So this zone could have validation because this zone had a liquidity cycle, right? So I could say, okay, price could come up here and use this zone right here as a POI. That's 50% of Asia, right? It could come up here, react from this 50% Asia range and push back down again. That could also be a potential range. So there's so much different probabilities of what could happen. And this is still within the extreme zone that we marked from the daily. So understanding that, I just need to have two range. But because I know with the fib tool that this is premium, my expectation is going to be waiting for here first from this area. You know, you get what I mean?
Yeah, yeah, for sure, man.
Yeah, sure. Thank you so much.
You're welcome. Um, Any other questions, guys? And I mean, as you can see, the candlestick, it looks strong. It's strong, bullish intent. But granted, we are further away from it. But by the time price gets closer, if the bullish intent is looking like this within the next daily candle, which will be Monday, if Monday closes strong in here, then I know that this zone is gonna fail. I'll continue to look for pro trend buys. Why? Because we've already taken this. This was the last high that led to this low that broke this structure. Now, this low led to this high breaking this structure. We have now entered a potential bullish market until we reach this zone and see if price gave us some sort of a reaction to come down. Otherwise, if it reaches this zone with a full body closure of candles, my now pro trend will be this way, will be buys, which means this will become the start of my main push. This will be the start of my main push to create a new leg somewhere up here, which would most likely be above this zone to create a second leg. So these are just little things you want to pay attention to. Remember, nothing is certain in the market. Nothing is guaranteed. You just want to see it play out in front of you and just go with what you see. Be reactive. That's all I would say. Just be reactive to the market. All right. If there's no other question, guys, I know it's getting late for you all. Um, I just wanted to have a quick little session with you all just to kind of give you a quick breakdown and understanding when it comes to these zones, what to try to look for, try to read the narrative, I identify or as I would say, investigate the zone, see if there's a buildup of liquidity, if there's a liquidity cycle happening in that zone. If there isn't, don't give the zone too much precedent and expect it to hold. Most of the time, price will react from zones that a buildup or an intentional movement, liquidity sweep cycle happen, or a buildup, inducement, expansion, all of these things happen. Those are the zones that you'll see a strong reaction. Like look at this one, for example. We had this buildup right here. We had an inducement and we had a push out. And look how long price consolidated in this area for 1 day London, 2 day London, 3 day London, 4 day London, 5 day London, almost 7 days price was in this area. So of course, once they come back, it's not just gonna blast through it, even though it's within a trend line. There has been a lot of liquidity that was built and generated in this area. So it's only right that it gave us a big reaction, adding the fact that news came also. You understand? So that's all it will be, guys. If you have any questions, feel free to send us a message or send me a message in the Discord. Hopefully next session, you Ume can lead us in a session because she did have
No, not me, not me. Next, Nyla.
Nyla did amazing last call with
See, I need to see how she does her one.
of course, but you did catch a nice trade with was it? No, I think it was
GU. It was
EU
Momo.
last week.
Yeah.
Right. So we'd love to at least see your thought process just for that trade. It doesn't
Yeah.
have to be no long call. You could just walk us through that specific
Inshallah.
trade
Yeah.
and just let us know what went through your mind, what made you enter it. And that's all. At least somebody will pick up something from it that maybe didn't really read the market in
Yeah.
that perspective. And they'll be like,
Mhm.
oh, okay, it makes sense to me. We're just all here to help one another.
Yeah, inshallah, hopefully, yeah, I'll try because I think like this will build the confidence as well. I know all of us read price action differently, and Nyla says it because she knows I do the gold too much. That's why.
Yeah.
So I'm like trying to familiarize myself with GU and EU.
All
Inshallah,
right.
yeah, I'll try
That's
next one.
good. Absolutely. Well, we look forward to it. Yeah,
Thank
we'll
you.
try to do that, guys, on days where we're not having, 'cause I know it's going to be once every 2 weeks now with the YU Zoom calls. So on days we're not having our Zoom calls, weeks, I mean, we'll try to implement one of these quick calls in to where we can still keep each other sharp, still keep our eyes on the market, trying to add a little bit of new details and nuances to our trading so that we can keep the consistency going in week after week. All right. All righty, guys. If that's it, no other questions. I appreciate you guys showing up. I appreciate your time once again. And I hope you all have a good night and have a good trading week this week. Kill it on the market, guys.
Yeah, same to you, man. Thank you for your time, my brother.
All righty, my friend. Talk to you guys later. And